Hello, so I'm an ICT trader. I've been uploading important parts of his speeches here on YouTube while I backtest or do live trades. It's been good because both my trades and backtests are informative and ICT's speech is really helpful. So in this video there is his speech. He talks about his son's strategy. So first let's hear him saying it. It's about 2 minutes and then I backtest it right here.
Very simple little model. It's very simple. An hourly or a 15-minute high or low that's most likely going to be drawn to for a stop read. You don't need a daily bias for that. You need to have an understanding of the daily range. It's probably made its interim high or low of the day, and there may be a retracement that's expected. Okay. Does it offer at least 15 handles from where you think it's going to be right now until it goes to that low to take the sell side? Even if it's going to go higher for the day? Or if we look at the hourly chart, that higher low that is most likely being drawn to, does it offer at least 15 handles? If it does, he's going to drop down into a 30-second chart and aim for that 15 or 60-minute high or low, whatever it is in terms of the draw that he's looking for. If it takes a 1-minute swing low out or a 5-minute swing low out and you're bullish and you're thinking for that 15-minute or 60-minute chart, folks, I'm teaching the model in case you're not paying attention. Once there's a 5-minute or 1-minute stop run against the direction you think the draw is, either the 15 or 60-minute liquidity, then you drop down to a 30-second chart. And the very first fair value gap, you enter on it. Your stop loss is 12 handles, and you aim for best case 15.
So an hourly draw on liquidity or 50 minutes draw on liquidity, that will be your bias, and then you expect a 5-minute or 1-minute liquidity run in opposite direction of your bias of your draw on liquidity, and then you enter trade in lower time frames, 1 minute or in 13 seconds with a PDA, a fair value gap, and your target is your draw on liquidity, but you close the trade in 15 handles as a beginner. So here there was this daily consolidation and price went in premium here. It was in premium, so at 9 a.m. I was expecting bearishness to go to discount down here, and there was this sell stop liquidity and this sell stop liquidity, and also there is this new day opening gap here. So let's go in lower time frames. Here he is at 9 a.m. Price declines here to first draw on liquidity, the new day opening gap, and in 9.5 price expands down and up and then comes back up, takes the liquidity here. Let's go in 1 minute. So this is the 1 minute chart. Price takes the liquidity here, the 5-minute or 1 minute liquidity run in the opposite direction, and there is this fair value gap here. Price comes here, you can enter trade right here after the liquidity has been taken, and put your stop loss above the 1 minute fair value gap and target your draw on liquidity. So after the price takes the liquidity, there is this inversion fair value gap, this inversion fair value gap, and price is moving in a balanced range. So you have a lot of entries here. You can enter here with this immediate rebalance and you can enter with this inversion fair value gap and with this inversion fair value gap. Here price goes through it and has a lot of retracement to it. You put your stop loss above it and target your draw on liquidities. Price really declined so much, so it's a really crazy trade. So here again in minutely chart, price was in premium and I expected bearishness. There is this draw on liquidity here and this draw on liquidity here, and as you can see this is the equilibrium, 50% here. As you can see this is a 50% of the range, the equilibrium, and under it there is draw on liquidity, there is sell stop liquidity. So Again at 9, price expanded up and price took this liquidity in 1 minute chart, and there is this volume gap here, price wicked in it and declined, and you can enter with this volume gap or this after price takes this liquidity, and or after the price declines and there is this fair value gap. So there is so many ways to enter this trade, and price expands down so much at true opening day 9.5, and here price goes to premium. Here it's in premium here and then here, and there is this sell sub liquidity. So here is 1 minute chart, there is this fair value gap here, and again at 9.5 price came up, took this liquidity here, and it's in equilibrium of this 1 minute fair value gap. There is so many entries here too, and price declines, fill this void and takes this sell sub liquidity and goes to the next level in discount 75%,